Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Vinay Joseph and welcome to another edition of our weekly podcast, The Week That Was, summarizing financial market moves over the last week and what to watch in the week ahead. Indian equities rose for the week with the Nifty index up about 2.5% as India's annual budget maintained the growth focus with a significant step up in capital expenditure, increased spending towards infrastructure, support for the manufacturing sector, and policy continuity and transparency on budget assumptions. In our view, a pro-growth budget is supportive of Indian equities, our preferred asset class for 2022. Further, the government's investment-based growth focus is likely to support a positive structural view on India's manufacturing sector and infrastructure themes, as well as broaden the value-style rotation towards our key preferred sectors, industrials, financials, and public sector enterprises. However, higher than expected fiscal deficit of 6.9% for the fiscal year 2022 and 6.4% for the fiscal year 2023 amid higher market borrowings pressurized bond yields, with yields across the curve surging this week. The benchmark 10-year IGB yield surged 12 basis points to close at 6.87%, its highest level since July 2019. Short-term rates and corporate bond rates also rose as investors started pricing higher rates amid also global tighter liquidity, with the European Central Bank and the Bank of India joining the hawkishness of other central banks this week. The INR appreciated 0.5%, outperforming peers, while commodities continued its uptrend as geopolitical tensions weighed on oil prices, with Brent crude trading close to $94 a barrel this week. Investors' focus now would shift to this week's RBI's policy, which holds significant relevance given the domestic backdrop and shifting policy stance of global central banks. In addition, bond investors would be looking for some relief bond measures given the elevated government supply of paper, which has driven a worsening demand-supply imbalance. In our view, the RBI is likely to commence normalization of monetary policy in 2022, starting with the tightening of the policy corridor from the present 65 bps spread between the reverse repo rate and the repo rate, moving it to a normal 25 bps in the first half of 2022, followed by interest rate hikes in the second half of 2022. So have a great week ahead. Thank you for listening to our podcast, and if you find it useful, please like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.